Hey, welcome back. You're listening to the weekend edition of the Korelin Economics Report. I'm Al Korelin, and I appreciate you joining me. Hey, let me know what you think of this video. Well, yeah, I'm really curious. I've got an old friend on the line who knows as much about gold as probably anybody in the world, Brien Lundin. Aside from being an LSU Tigers fan, he's a really good guy. We're going to be down at his show, which is October 26th through October 29th. In my humble opinion, it has the biggest names of any of the investment conferences out there. Glenn Beck, among others, is going to be speaking there. So I'm looking forward to that. But you know what? We're not talking about we're not talking about his show right now. What we're talking about is what's going on in gold. Gold on Friday and on Thursday actually began to firm up a little bit, starting a long collapse. I'm going to turn it over to Brien, but I want to say one thing, and that is, Brien, in looking at the long-term chart, the trend is still, in spite of the panic out there, which I think is only being exhibited by, oh, for lack of better terms, I would have to say novice investors. You know, for the long term, gold is looking very good. The trend is very definitely upward. What do you think?
Absolutely, Al. The long-term uptrend trading channel for gold is still very much intact. You know, with that said, it's a fairly wide uptrend channel. It's about $400 wide at this point. But if you go back to the history of this beginnings of this bull market in 2000, 2001, that channel has never been violated, and it's fairly steady, except for the 2008 credit crisis when we saw gold, as you well remember, subject to bouts of liquidation during that cash and credit crunch. But that channel is still very much intact. Recently, in August and early September, we really were crawling along the very top of that channel. A lot of people were looking at gold and saying it had gone parabolic. It had nearly gone so, but actually didn't. It was still right along the very top of that channel if you look at it on a logarithmic scale. And now it's just going back down toward the middle of that channel where really it should be for the health of a long-term bull market.
I have to tell you, you know, corrections are inevitable. You and I know that. You and I have, you know, old war horses in terms of this game, and I'm loving every minute of it because I'm listening to comments from our listeners, and there is a bit of panic out there on the part of some of the people. But you know, the old pros, and you can really tell those guys very easily, they're not concerned, and they're viewing this as being very definitely, in terms of the commodities, they're viewing it as being a tremendous buying opportunity. I mean, silver, $50 not too long ago. Now we're down to what, $30 or thereabouts. Gold, major correction, and not a major correction, but a significant correction going on in gold right now. I think it's a great time to buy.
Absolutely, Alan. That really isn't an unpopular opinion. If you look around the world, some of the smartest gold buyers are the people who actually buy physical gold as a means of savings in Asian countries. And they're buying it hand over fist. Even in the U.S., we hear anecdotal reports of people going to the local coin shops and those shops being completely sold out, particularly of silver. So there's been a huge, massive rush to physical metals on this downturn, and people are looking at it as a real bargain buying opportunity.
Hey man, I got to tell you, I was in Vancouver early in the week, specifically on Monday. Walked by a bullion dealer on the corner, right around the corner from West Pender and Howe. There were probably 100 people in there, Brien, looking to do a transaction. And you know what? Each one of those individuals had to wait at least an hour to begin their transaction. And the story, wow. Yeah, and the rumor that I heard was that 90% of them were buying silver.
Yeah, and we've seen that, as I said, around the world. In India, the bullion dealers, the gold dealers especially, are essentially traumatized by the recent action because of the import duties and et cetera. And in some cases, they were just frozen and weren't able to even fulfill the demand or even open up because of the onrush of demand and them holding inventories that were at higher prices. So it's a real issue. I think that's supporting the metal right now. I think what we've gotten is, hopefully at this point, we've gotten much of the speculative froth blown off the market. But one of the key aspects of this market is that decline, everyone thought it was primarily long liquidation, but there was a lot of shorting done along the way to help it along. At some point, if the headlines work in our favor, and if we have a progression in sentiment to a realization in the market that all of these efforts in Europe are going to end up being highly reflationary from a monetary standpoint, eventually those shorts are going to have to cover. So that, I don't see it happening in the very near future, but there is a possibility of a short covering spike in gold at some point a little bit down the road.
Brien, let me ask you this. You know, a very, very interesting question right now, again, that a lot of our listeners are bringing up is they're saying, Korelin, you're on the bandwagon, you're crazy, it's not all coming up roses. And I am saying, and right now I'm talking specifically, Brien, about the commodities themselves. I am saying, no, I think you're wrong. And the reason I think you're wrong is because let's forget about technical analysis just for a moment. You know, we have people such as yourself who address the issue of commodity prices vis-a-vis technical analysis. I'm not a technician. I'm a very definite fundamentalist. And I got to tell you, man, the fundamental reasons right now for buying gold and silver, I think, are as strong as they've ever been.
Yes, they are, Al. And if you're looking at the long term, it's really more bullish than ever. We've seen the repercussions so far of the massive amounts of debt that have been built up in the Western economies. And those repercussions really have yet to run their course. Eventually, they're going to end up with tremendous monetary reflation, monetary creation. We've already seen that to some extent in the U.S. There's more to come, and there's lots more to come in Europe. The European Financial Stabilization Fund, that's being leveraged up from 5 to 8 times over. That's just the European version of Fannie Mae and Freddie Mac, and we know how well that worked over here. The end result is that that's going to be very highly inflationary and reflationary from a monetary standpoint, and the repercussions will be felt in higher metals prices and commodities prices in general.
Well, I agree 100%, but you know, let's talk about what I'm very near and dear to, and I know that you are too, and that is the stocks. I mean, the stocks that I am invested in right now, up until a few days ago, you know, I was doing okay. They were off, but they weren't off necessarily significantly. Now I'm seeing, I don't want to say a cascading waterfall, you know, but I'm seeing some of my share prices, some of the share prices, I should say, of the stocks that I own, Brien, you know, going down 20–25%. Now, call me a Pollyanna, you know, with my head in the sand, but I'm still not concerned. Are you?
Not for the longer term. You know, right before this dramatic correction in gold, we saw the major mining shares, the senior producers, just start to really offer leverage to the gold price. They just began to outperform the gold price finally. Of course, all of that was wiped out. All that good work was wiped out by the very steep correction. I think it will take a bit longer before we see that, or a little bit of time before we see the seniors start to outperform gold again. But I do think that will happen. Eventually, that's going to filter down the food chain to the junior exploration and development companies. But that's going to take a little bit more time. The problem we have with that is we're getting into the tax loss season if that takes much longer. And really, I'm looking at early next year into next spring before we see a major rebound in the juniors. But that's not to say that the current prices are not, you know, at bargain levels that should be taken advantage of.
Oh, I agree 100%. And, you know, and one thing that I've learned over the past 30 years in this business is, in reality, there are companies out there, if you're very, very careful, you really look at the fundamentals of the companies, you know, you look at the management, you look at the capitalization, you look at the amount of money they have in the bank, etc. There still are companies out there that will definitely outperform the market, in my opinion.
That's true, but you know, it has become more of a stock picker's market. If you remember back in the early 90s, the last time we had a really, you know, very fervent, high-powered junior stock market before this cycle, if you look back to that era, today's market is much more diluted. We have probably 4 to 5 as many companies out there, and each of those companies probably have about 4 times as much stock out on an average basis. So you're looking at anywhere from 15 to 20 times dilution from back then. And we just have not added that many new investors to the market and the ETFs, et cetera, have robbed a lot of that buying power from the metals and mining sector. So it's a tougher slog now. It's not a rising tide lifting all boats, very, very strongly. You have to find the right stocks, and you have to put some work into it.
You very definitely have to find the right stocks, and you very definitely have to put some work into it. And I want to tell you guys on a closing note here, one of the ways to find the right stocks is to attend conferences like Brien's down in New Orleans, October 26th through 29th. I highly recommend it. I completely endorse it. I'm going down there. I'm going to be spending the entire time shooting video, doing interviews, etc. I have to tell you, I love going to New Orleans, but I'm really looking forward to going to this particular conference. Brien, thank you so much. And you folks out there, thanks so much for listening. We'll be back with you next week.